Hello and welcome back to the Sustainability Talks podcast. I'm your host, Patrick Sheehan, Managing Partner at ETF Partners. We're Europe's leading venture capital firm focused on backing businesses that deliver what we call sustainability through innovation. In today's episode of Sustainability Talks, I'm speaking with Philipp Rose, Managing Director of Robert Bosch Venture Capital. Philipp's had an illustrious career across the finance space with firms such as Credit Suisse and J.P. before a number of years ago now joining Robert Bosch, and then more recently taking over and running Robert Bosch Venture Capital, which he's now done very successfully for a number of years. But today we'll discuss Philipp's experiences and insight as a leader and visionary in the investment space. We'll explore how Robert Bosch is supporting startups around the world whose technologies have the potential to improve quality of life and conserve natural resources. And we're also going to talk about Robert Bosch itself and its ambitions and achievements in becoming carbon neutral, which I'm honestly very impressed by. Welcome, everybody. I'm so pleased, Philipp, we go back a long way. So this is a very friendly chat, but I think for the audience, it would be great to learn a little bit more about you and your work with Bosch. And so people know where we're going to go. After that, we'll talk a little bit about the remarkable work I think that Bosch has done to become as carbon neutral as possible. And then we'll switch gear and talk about venture capital, of course.
Yes, sure. Hi, Patrick. And thank you. Thank you also for the invitation here. Yeah, I'm Philipp Rose. As Patrick said, I had the Robert Bosch Venture Capital entity, the corporate venture capital activities of the Bosch Group, the German engineering group. I'm in that role already now since 8 years. I joined Bosch some 19 years ago, coming as an M&A expert from J.P. and back then I decided to change the side of the table, not be the advisor, but the decision body kind of. I had a couple of CFO type roles within the Bosch Group, both in Germany and abroad. And then indeed, 8 years ago, I was asked to be the co-head together with my colleague Ingo Kramer, the co-head of the Robert Bosch Venture Capital entity. Me coming from the commercial side and Ingo is the technical expert.
And Philipp, before we move on, it sounds like you must have had somewhat of a culture shock coming from the world of investment banking into Robert Bosch. Was it very different?
Oh, yes, it was different. However, I always say that even though the Bosch Group is such a large group, when it comes to strategic decisions, and the first couple of years I did M&A internally in Bosch, then the Bosch Group can be very, very fast and very lean and very kind of to the point. And so I never really, also in my CFO roles in different business entities of Bosch, I never really experienced that the Bosch Group as such is this kind of slow, complicated, big group that doesn't really move. You can achieve a lot and very fast within Bosch, which is a great thing to have in such a big group.
It really is, and we've seen that actually in Bosch's announcement a few years ago that it would become carbon neutral. And remind me, when was that announcement, and how rapidly did it move?
Yeah, so the announcement was finally done at the annual press conference in 2019, so May timeframe 2019. And it was then announced that already by 2020, the entire Bosch Group, with its more than 400 locations globally, would be CO2 neutral in that year, 2020.
I'm going to interrupt now because that just sounds impossible.
Yeah, well, it was well prepared, and maybe I talk a little bit about the history and how Bosch got there. It was, of course, not unprepared, the announcement. So it all goes back to Volkmar Denner taking over as CEO of the Bosch Group back in 2012.
Right.
And he always says that within his first week of being CEO, he asked the corporate research department to come up with a concept to make Bosch carbon neutral. And he insisted on this topic since then. And first answer of the research colleagues was, well, it's not possible really. It would require to install and pay for more than 1,000 wind turbines globally, which would cost Bosch more than 5.3 billion euros. And the CEO said, well, yeah, that's probably not a solution, but nevertheless, come up with a different concept with not just one measure, but many or different measures. So the second answer was, well, we can also do forestry, and we can build 170 square kilometers per year of new forests. I.e., they still didn't believe it was doable. But Volkmar Denner, being how he is, and being convinced that there should be more in it, he insisted and asked for many steps, maybe smaller steps. And they started with, and that was then 2015, that they said, okay, at least in some areas, electromobility and our IoT business, which back then was only 1% or so of global revenues, that we want to make carbon neutral. And they achieved that. And in parallel, they started purchasing more and more green electricity, that whatever electricity Bosch needs to use, it should be green.
Right.
And then the next step was 2017, when Bosch decided to build a new wafer fab in Dresden, which is quite an energy demanding plant. They said one precondition for this is it needs to be carbon neutral. So from the day one of the planning of this wafer fab, it was all including it needs to be carbon neutral, which also was then achieved. And then in 2018, they internally said, well, we want to be carbon neutral latest by 2030, and they decided so internally. But they also said, let's also have a scenario planning how we can achieve that in 2020 already. And they looked at various scenarios and risks to this, and so. But a couple of months later, they really were convinced that it is doable already in 2020. And that's why they then also published it at the annual press conference 2019. Right,
that's so impressive. I guess the secret then is in addition to careful planning, it's to start early.
Yes.
So Bosch has been carbon neutral on some definition by 2020, but can we explore the definition and what you mean by carbon neutral?
Yeah, sure. So by 2020, it was scope 1 and 2. So right. All internal activities. And there it is on a global scale with all more than 400 locations and all kind of internal aspects of the business that since then, and it has been audited, as you can imagine, is since then carbon neutral. And right. It was actually achieved with less budget than what they initially planned for.
Impressive. And so at that stage, 2020, you weren't carbon neutral at the scope 3 level. In other words, at the level of your suppliers, the logistics, how your products are used, but in terms of the internal operations, you were carbon neutral.
Yes, correct.
So is that enough? Or are you pushing it further?
Oh, no, we are pushing it further. So in 2020, once that first goal was achieved, Bosch decided, well, we need to do more. And we need to do more both on scope 1 and 2, and as well as also on scope 3. So for scope 3, the target is to have a reduction of 15% of the CO2 emissions by 2030. Right. And as you said, this is both downstream and upstream, i.e. the use of the Bosch products as well as purchased goods and services and logistics. And as you can imagine, these 15% reduction is by far a much, much bigger figure than what Bosch internally can save or reduce on the scope 1 and 2.
And then you have to influence your entire supply chain and customers.
Correct.
Yeah. So, why is Bosch setting such ambitious targets for all this? I mean, I think it's great, by the way, and very impressive. But why?
The short answer could be because our CEO back then was a physicist. But that's probably too short an answer. But nevertheless, it was very fundamental that Volkmar Denner himself was very convinced that it is doable. He took it on board on day one, kind of, when he was CEO, as his personal project. He can be very persistent, and he doesn't accept a no. So he really challenged the organization again and again to come up with better ideas, with more ideas, with smarter ways to tackle it. But I think what also was certainly helpful was that Bosch, as an organization, was already a long time familiar with the topics of energy efficiency and emissions mitigation, because they also, especially in the mobility area, saw big business opportunities, and they worked on it for many years already.
And so now that you're sort of a long way down the track, I guess you can reflect on the impact on Bosch of doing this. I mean, has it made business more expensive? Has it made Bosch a better business? How would you characterize the impact on yourselves rather than on the planet?
The achievements so far were less costly, if you want, than what they initially thought. So and the whole thing was achieved through 4 measures, if you want. First of all, there was a huge increase in energy efficiency in the own operations, in the plants and wherever else. So huge savings of energy by just doing business smarter. Then on top, they expanded the supply of renewable energy by really investing in big wind or photovoltaic plants, where they then exclusively kind of supply Bosch with green energy. I mentioned green electricity and purchase of green electricity already. That was the third measure. And then, unfortunately, at least at this stage, it cannot completely be avoided in all plants globally that there is some CO2 emissions. And this will then be offset by carbon credits, so as a bridging solution.
Now, I was going to ask, overall, it sounds like there was a lot of innovation required. There was a lot of efficiency gains derived. So again, do you think kind of Bosch is a better company for having done this, or is it a company that can afford the cost, as it were?
Of course, there's a cost related with it, and indeed, the Bosch Board of Management was prepared to invest in there, and they invested already a lot. They now for the next goals, also for Scope 1 and 2 until 2030, they have already approved an annual budget of 100 million euros every year. Right. In order to achieve the further reduction targets until then. So yeah, it doesn't come without a cost, but Bosch is convinced that this will be paid off elsewhere. And if you go out there and say we are carbon neutral since 2 years, first of all, it is a huge boost for the morale of the Bosch employees. Right. I experienced that here and there, and again in internal discussions, that the people are really proud to work for a group that is internally, at least, carbon neutral and is working on further carbon emissions reductions also in Scope 3.
No, it is very impressive. But what would you say to other large organizations that are grappling with these challenges and setting goals and targets, and typically not as ambitious a set of targets as you've already achieved?
Yeah, I think first of all, the message is it can be done. So Bosch has shown it can be done, and therefore it should also be possible for others to do it. It can be done, certainly, but it doesn't come overnight. It needs, as you've seen, long years-long preparation and a lot of thinking, also out of the box thinking, new ideas, new approaches, and so on. And it definitely, in my eyes, needs high-level commitment and support. Ideally, the CEO, but right. Really, it needs to be fully supported, and not only supported, but asked for, kind of, right. by the CEO, ideally.
Yeah, that sounds very right to me. The bit you haven't touched on, and I'm now going to touch on, which will move us into talking about your venture capital operations, is a willingness to innovate and change, which Bosch really seems to have. But I'm going to pick that up in terms of asking why through this period did Bosch decide to move into venture capital investing?
That is a bit longer ago, actually.
Okay.
In 2007, the then CEO realized that Bosch didn't really know enough about innovation that is coming out of the startup area. So Bosch was very much internally focused, and he said, we need to know more and earlier and in a systematic way what relevant innovations are actually coming out of the startup area. Back in 2007, for example, Mobileye already got quite some attention coming from Israel, and there were other startups becoming big already, and therefore the board of management said, we need to know more. We know too little what's happening there. So that really was the initial reason, create transparency, and fortunately the management team also realized in order to do that, we need to address the market as an investor. So only if we show long-term commitment to again and again invest in startups as well, we do get this access to the market, that startups talk to us, that co-investors talk to us, and so on. So that fortunately was a decision on day one already back then.
Right, and do you think that's still true, that to be meaningful in the innovative community outside of Bosch, that you need to be an investor?
I definitely believe that, yes. If we would kind of stop our investment activities, but still kind of try to look around in the VC area, in the startup area, they would shut down. They would not open up to us anymore. So yeah, I'm definitely convinced that being an investor is a required measure.
Okay, so your original aim was getting into the startup community, learning about innovation, and becoming an investor was a means to an end. Is that still the position, or has it moved on?
It definitely has moved on, and it was as you said, it was about transparency, and so it was also about challenging the internal organization, the R&D entities that we were asked to challenge in terms of, look, you go this way, they go this way, or you've achieved this much in 2 years, they have achieved much more. So also from an overall Bosch perspective, it's also kind of risk management that they asked us to do here. But what later came on top, once we had a good establishment in the VC area, and since many years we see globally more than 2,000 startups every year. It was then more the question, well, there is so much relevant innovation coming out of these startups. Why can't we use that more often in terms of Bosch collaborating in the one way or the other with these relevant startups? And this is now kind of the more important strategic task that we have and that we tackle since a couple of years very systematically, and where we see more and more progress and successes.
It seems to me that Bosch has been pretty successful in its venture capital activities, and pretty consistent. Is that a correct perception, by the way? But assuming it is, what have been the secrets?
Well, first of all, we had a purpose, and that is always helpful. We also worked regularly on the purpose. As I mentioned, initially it was about transparency, about access, about knowing more. and we developed that towards more strategic collaboration projects. Secondly, I think it was very wise to clearly differentiate from day one between these kind of more strategic goals and the investment side. On the investment side, we, RBVC, are very independent. We internally decide whether or not we invest, and we manage the investments, and no Bosch business entity has any kind of influence on our investment side. And I think this clear distinction between the two was very helpful for us as well.
Yeah, and if I may on that point, though, I can understand how that helps you run a more rigorous investment program. But I guess the argument is often that it means you become less strategically relevant to the organization because you're not connected enough. How do you avoid a focus just on returns and not on those strategic benefits that you highlighted?
By incentive settings, for example, okay. by regularly also having meetings with an advisory board that is more interested also on the strategic aspects of our business than on not only the financial side. Okay. And plus, we want to do this in a long-term sustainable way. And therefore, we inherently also have an interest that we create some kind of value add for the Bosch Group in total. Right. We don't want to be completely independent. And it helps. Right. I mean, last year, when we applied for our fifth virtual fund, which we increased, the fourth fund was 200 million, the fifth fund now is 250 million. That was a very easy process. The Bosch management kind of very easily approved the next fund. So we know that for the next 10 years, we can continue our investment side.
Oh, fantastic. And it seems to me you have a big advantage in terms of the ownership structure of Bosch relative to public companies. Is that a big help?
Well, for that, I don't have a comparison to the other groups that are publicly listed. I don't know how difficult for them it is to raise.
Perhaps I'll offer an observation that Bosch is able to have a very long-range plan as a privately owned organization, perhaps more easily than some public companies, which personally I think is very important. Because
that is certainly true. Yeah, I mean, we see that in many other aspects of the business as well, but also for us, it certainly helps that Bosch usually always takes a very long perspective.
Yeah. And do you think you have managed to change the culture of Bosch because of your venture capital operations? Because Bosch has such a strong culture, right, and such a long-term culture. Have you influenced it for the better?
We are in the middle of that. It's an ongoing process, but we see indeed indications that we have an impact. It started already in the first couple of years once we did approach the business entities with more and more startups, and the first couple of years they didn't want to know anything about it. But over time, more and more people realized, oh yeah, this is relevant and there is innovation happening out there and we should focus more on that. And all the way to that they at some point actually told us that they have seen startup XYZ here or there, which we should have a look at. So there was already in the first years quite a big change. And since we have institutionalized and structured this kind of open innovation process more clearly to create more collaboration between Bosch entities and startups, we also have seen more and more people jumping on that idea and wanting to partner with the startup. And we are at the stage where we now not only count the number of proof of concept projects every year in that aspect, but actually more the real long-term partnerships that come out of it as in a KPI. So there is quite some progress in that area as well.
Oh, fantastic. Thank you, Philip. This has been such an interesting conversation. I'm going to ask you to just maybe give a final comment or two, perhaps words of advice to other groups going down the same road as you, looking at corporate venturing, or indeed to entrepreneurs who are interested in working with you guys. So any final comments you'd like to make?
Yeah, thank you. So it's an exciting time, and it's amazing to see how an established corporate venture capital entity still can further develop as well with this open Bosch, as we call it, the open innovation approach that we took a couple of years back. It was a further development, and there are other aspects. We raised last year. We raised an external fund in China. We just recently opened an office in Boston. So there's always things happening. I think for other corporates, it's helpful and necessary that they, first of all, ask what is our purpose for doing venture capital. And there are so many different business models out there that in the corporate venture capital area, that there is no advice really what is the right one. But each group, in my eyes, needs to come up with its own purpose, strategy, and then set up the structure that fits this purpose. And for other startups, we have a very open and transparent website. So we do deep tech investments in automation, electrification, in energy efficiency or sustainability, if you want, to some extent in healthcare, and anything that makes business life more efficient, less costly, faster, with less energy, we definitely look at.
Fantastic, thank you. My final thought, by the way, is to look forward to the announcement by Bosch that you've reached carbon neutrality in terms of that scope 3, your suppliers and customers, way beyond your targets, or far sooner than your targets.
Yes.
I mean by that because I think it's a real inspiration for other large companies. So I wish you all the best, and thank you very much for your time.
Thank you, Patrick.
Thank you for listening to this episode of the Sustainability Talks podcast. To find out more or join as a guest, head over to the ETF Partners website at etfpartners.capital. You can also connect with us on LinkedIn and follow us on Medium at ETF Partners. Until next time, thanks for listening.